This is David Russell, Global Head of Market Strategy for TradeStation. And today we'll look at major events for investors and traders. Stocks barely moved last week as they concluded their third straight winning quarter. The S&P 500 fell less than 0.1% between Friday, June 21st and Friday, June 28th. It was positive for most of the week, and at one point was up more than 1%, but turned negative in the final minutes of Friday's session. The slide came after the index made a new all-time high above 5,500. Federal Reserve officials, including Lisa Cook, Mary Daly, and Raphael Bostic, made comments about inflation cooling and an eventual easing of interest rates. Michelle Bowman was the opposite, hinting that rates may need to go higher still. Monetary policy is likely to remain in focus this week, with Chairman Jerome Powell speaking tomorrow and minutes from the last Fed meeting on Wednesday. Next week also has testimony on Capitol Hill and more big inflation data. Speaking of inflation, the Personal Consumption Expenditures Price Index matched expectations. It wasn't a huge surprise following other mild readings earlier in the month. Initial jobless claims beat expectations for the first time in 5 weeks, and consumer sentiment was revised higher. Those headlines may suggest that recession isn't much of a risk. Regional banks were the biggest gainers last week. They jumped after stress tests showed higher capital levels at some of the bigger lenders. Energy stocks bounced on worries about tensions in the Middle East and supply concerns. Communication stocks were lifted by gains in Alphabet and Meta platforms. Software companies also rallied as money flowed back into stocks like Palo Alto Networks and Salesforce. Utility stocks and materials, the two weakest sectors in June, were also the worst performers last week. There were some noteworthy stories at the individual company level. FedEx beat estimates as cost reductions boosted margins. The shipping stock had its biggest weekly gain in 4 years and was the top performer in the S&P 500. Cruise ship operator Carnival jumped after beating estimates and providing strong guidance. Tesla had its best week since April amid optimism about its existing models and its upcoming robotaxi. The electric car makers also concluded a salary negotiation with CEO Elon Musk and reports deliveries this coming week. On the bearish side, Walgreen boots plunged to its lowest level since 1997 after citing weakness in its retail business. Nike also struggled with increased competition and fading interest from Chinese buyers. And now let's chart the market. Traders may see potentially negative and positive patterns on the S&P 500 as the new quarter begins. The main negative is potential resistance at 5,500. The index pushed above that level on June 20th and again last Friday. It got rejected both times, creating bearish outside candlesticks. That's when prices make a higher high and lower low. They are potential reversal patterns. On the positive front, bulls may interpret the succession of higher highs and higher lows as an uptrend. They may also notice how the relative strength index, or RSI, has remained near overbought readings without significant drops. That resembles the action in November and December when the current rally began. Narrow price action without significant drops could also reflect a relative lack of selling pressure. This is visible in tight, sideways price action, similar to the way stocks behaved in November and December when the current rally began. Traders may watch the June 13th low of 54.0H2 and the June 12th high of 54.47 for potential support. Interest rates could be an even bigger consideration, with the yield on the 10-year Treasury note sitting at a key long-term level around 4.3%. Further declines from here could potentially support equities, while increases could hurt sentiment. That heightens the importance of upcoming economic events, like non-farm payrolls this week, plus 2 events next week: Fed Chair Jerome Powell's testimony in the Senate on July 9th, and the Consumer Price Index on July 11th. After that, earnings season begins. This week is abbreviated by the 4th of July on Wednesday, but it still has a few noteworthy events. The Institute for Supply Management's Manufacturing Index is today. Powell makes comments on Tuesday morning. The government's report on job openings, known as JOLTS, is also due. Wednesday has an early close because of the holiday, and some events normally on Thursday move forward. So it features ADP's private sector payrolls report, initial jobless claims, the Institute for Supply Management Service Sector report, and crude oil inventories. Minutes from the last Fed meeting will be released at 2 o'clock Eastern Time, 1 hour after the market closes. Then on Friday, July 5th, the Labor Department issues its big monthly report for June. The big items are total job growth, the unemployment rate, and wages. Those could also have an impact on interest rates. Thanks for watching. Please visit tradestation.com for more.